Hi there, I'm Joe Stather, Associate Director at CBRE Hotels. That's the hotels team that sits within the wider CBRE business, and my focus is investment advisory. So that's pretty much everything that doesn't fall under a sale or a straight valuation. So let's start with my first slide and on what's really critical, and that's value. So here we're showing prime regional UK capital value growth on a monthly year-on-year percentage change. And you can see that reflected on the y-axis to the left-hand side of the chart. So what we have here is the pink line, which is capital value percentage change. And then we also have how that percentage change is driven by A, the cash flow, and B, the yield. And of course, in hotels, given that it's an operational asset class, the value is basically the cash flow, which is hotel profit, divided by the yield, which reflects the investor appetite to acquire hotel stock. So starting at the beginning of the time series, and we can see how in difficult times through the financial crisis, we saw falling hotel profits as the demand for overnight accommodation fell, and also a fall in yield, which was also impacting capital values as a result of slowing investor demand to acquire hotel stock. Moving through to 2013 and 2016, we can see a pretty intense period of hotel capital value growth. And that's been driven by both profit growth, as there was more overnight demand and hotels were able to capture that, and of course increasing investor demand, which is increasing the multiple of EBITDA that's paid for hotels, and therefore we have that double whammy effect where capital values really rocket. If we look more up to the present day, you can see that yields are very much flat at the moment, and we don't expect yields to change very much in the coming few months as a result of increasing interest rates, which has increased the cost of equity and debt. And we're also seeing a relatively benign landscape in terms of hotel profit growth. And that means that at the moment, value growth in the hotel space is seemingly much harder to come by than at earlier phases in the performance cycle. Now moving to the next slide, which shows UK hotel portfolios. And this is really using portfolio trades as a bit of a proxy to show the overall health of the hotel investment market. Now on the x-axis we have time, and on the y-axis we're showing the multiple of profit that investors are paying to acquire hotel portfolios in the UK. Now the size of the bubble reflects the deal size, and the colour shows where the origin of the capital or where the buyer is coming from, and you can see that in the key on this particular chart. So from 2006 to 2008, most of the portfolio trades were being driven by domestic UK and European investors. And just to give a bit of context to that, in October 2006, we saw the trade of the Menzies hotel portfolio, and in June 2007, we saw the trade of the Jurys Inn portfolio. We then had a prolonged period without any transactions, certainly of major hotel portfolios, and that was through the financial crisis, when we actually saw a number of hotel portfolios being taken over by the banks as they entered a distressed position. The first trade after the financial crisis came with the Ramada Jarvis hotel portfolio in December 2011, which was followed by the Principal Haley portfolio in February 2013 and the Hallmark portfolio in July 2014. And you can see that most of these trades in the early phase of economic recovery post the financial crisis were driven by the more opportunistic North American private equity funds. Now, the private equity funds started selling out at higher multiples, first to Asian buyers, which are the orange bubbles that you can see on the chart. And we expected Asian capital to be the next big driver of hotel investment in the UK. However, partly because of outbound capital restrictions in China, we've not actually seen the full potential of Asian capital realised in the UK market. And instead, we've started to see trades again dominated by the domestic and European hotel funds, more recently with the transactions including Q Hotels, Jurys Inn Hotels again, and again the Principal Hotel portfolio, which recently sold to Convivio. So we really have gone full circle in terms of buyers, and some might be looking at the EBITDA multiples that are being paid in the market and how they sit relative to those that were paid just before the global financial crisis, and maybe getting a little bit worried. But let me just reassure you that versus other property types and other asset classes, and also bond yields, hotels still look relatively well priced. I think it's also worth mentioning that the market is now much more sophisticated. So investors that are currently entering the hotel market have much more data at their fingertips, and there's much more transparency in the sector to make better decisions. And that in itself lowers the risk of investing in the hotel space. Moving on to my final slide here, and it's worth mentioning that hotel performance in terms of revenue is very much at the top of the cycle in many UK markets. However, here we're looking at the conversion of total revenue through to operating profit. And as I mentioned in my first slide, hotel values are very much a factor of hotel profit against yield. So here we have the key UK markets and profit across the last 10 years. And you can see from the y-axis that we're looking at the conversion of total revenue through to gross operating profit across the last decade, which is about the cycle. Now we have the pink diamond, which represents current hotel conversion of revenue through to profit. We also have the high point of the last 10 years, and we have the low point of the last 10 years. Now, as I mentioned, RevPAR across many markets is at or near the top, but RevPAR as a metric can flatter to deceive, and that's why we're looking at gross operating profit here. So given the high occupancy and rate seen in many markets, we should be looking at maximum efficiency, and therefore those pink diamonds should be near the high point of the cycle, but that really isn't the case. If we take London to begin with on the right-hand side of the plot area, you can see that it's got relatively high conversion of revenue through to profit, largely because it's such a high-tempo market. However, profit conversion at the moment is actually at its lowest point in the entire cycle. And the main driver behind that is that since June 2016, which was the time of the EU referendum, we've seen a 7% increase in hotel payroll. Now, the Birmingham market is also fighting a similar battle, with payroll up 7.6% based on June 2016 levels. And in Manchester, we have an 8.4% increase in payroll, again over the same period of time. Now, when you consider that payroll accounts for circa 45% of hotel operating costs in full-service hotels, plus the impact of food cost inflation, which is also very high at the moment, you start to see some of the battles that hotels are facing and the reason why the conversion of revenue to profit isn't at or near the top at this current point in time. Moving across the plot area to a market such as Newcastle, you can see how Newcastle has relatively low occupancy and rate, and that's causing inefficiency in the market, which means that profit conversion is at a low point relative to other points in the cycle. And just look at the high watermark that was set in Aberdeen at the height of the gold rush there, where high oil prices were driving a lot of demand for overnight accommodation in that particular market. Country house hotels, finally, on the left. Country house hotels have an enduring appeal with leisure segment, but have relatively few rooms, are generally F&B heavy, and are old capital-intensive properties, which means that their conversion is low relative to many of the other markets that you see here on the chart. I think from this particular chart, we can also see the appeal of serviced apartments, limited service hotels, and hostels, which are increasingly seen as an attractive investment opportunity. And in these particular types of accommodation, it's not uncommon to see conversion at the moment of around 50% in terms of revenue through to profit. So I hope those 3 slides have been insightful and given you a good idea of where the hotel investment market currently sits. Thank you for your time and thank you for listening.